What is going on, everybody? It's your boy MC Fire.
And Ice Cube.
We are here today to talk about our utter failures. So, I'm just kidding. No, we're here to talk about the markets and our book haul too. Getting knowledge. We actually recorded an hour-long video. It was raw quality, and then we were trying to serenade you guys while we were going through the market. Utterly ruined the video. The audio overtook everything.
Yep.
It was complete garbage. So we're here today, and we want to give you guys a quality video, and this time not have
No music.
no serenade. Yeah, it's bad, but we're gonna redo the video for you guys, because yeah, and we also moved the mic. We kept hitting the mic too, so
Yeah.
if you can see our brand new mic.
Ding, ding.
Hi, what's up, Mike? Hopefully we don't hit it.
Hopefully.
Yeah, hopefully. Big keyword. So, biggest takeaways, right?
We'll try not to be goofy in this video.
Yeah, we're not gonna play around, but we will still have fun though. We will still have fun. One thing we want to know is we want to keep you guys abreast on what we're reading at the time and our live. So, one of the biggest things that I think I want to learn about is financial markets and how they fluctuate during periods of adversity. And we have Mr. John Mack, if you guys don't know who he is, CEO of Morgan Stanley during the 2008 crisis. He was with the firm for a very long time, and he became CEO. And then when the crisis was going through, he was at the helm of that hedge fund. So I want to know, like, what goes through their head, like what goes through a hedge fund manager's head when, you know, there is squawk on the box for Wall Street, when there's a lot of turmoil.
Did you say squawk on the box?
I did. He said it in his thing, like when he wants to motivate the team to like change something or get going, he like squawks on the box. It's like you're talking to the sales floor and the trading floor all at once. And it could be, it's almost like a walkie-talkie throughout the building. So he could talk to the traders and stuff. It's like, hey, like, do this, or hey, we need to push this, or rally behind this, right? So it's one of those things, like he says, squawk on the box. When things are really going down, he's like, hey, get your butt moving, right?
Gotcha.
It's cool to kind of get those insights. But we also, Q's reading, what are you reading?
Spy secrets that can save your life.
Yeah. So we were leaning more towards practical application, and the reason is I think we've rewired our mind to like think asset first, think creator, inventor. You know, we've read the Robert Kiyosaki's, we've read the Richest Man in Babylon's, and our mind is wired, but practical, like skill based, we need to be able to get the real skills to produce and create. So Q, in her divine wisdom.
Oh my gosh, are you gonna show them?
I'm going to show them again because I'm just like, yeah, this makes perfect sense.
Oh my gosh.
So, again, Q,
Don't judge me.
judger, right? Judger. She got these little locks that you can, like, break into. Like, she's got, like, a little break-into key. Because I was like, Q, do not practice on our front door. She was practicing, like she literally spent an hour trying to break into our house. I'm like, please do not show the neighbors that you can break into our house. That's just not what we're gonna do today. So she got these like little like testy keys because it's a good skill to have. And the reasoning was what?
If we're in need of getting into our home, if something was to happen where
Like an end of the world scenario,
Yep.
and you're not able to get into like to get resources.
correct.
Companies,
Or getting into safety, somewhere you can just safely kind of hide out until
from critters and stuff like that.
things pass. Yeah.
There's a bear out there. You never know.
Exactly.
But yeah, she's diving into that and reading that book, which I think is actually really cool. Because it's a skill set. She learned how to do that. Like she actually practiced on those things, and you were
I
successful.
did
right?
it. Yeah. I did it within like 5 seconds. I was like, oh, this is easy.
Yeah, it's like,
I was like, oh,
she's
I
in
guess
there.
I'm a natural.
Yeah, well. But again, guys, this isn't like to like. It's not nefarious. It's really for. It's a skill, and I think it's a good skill to have for that specific event. What they put in the book. So.
Yep. Like I'm also looking into learning like hacking and
Oh yeah.
stuff, and it's not because like I'm trying to hack people. I just want to, I want to work on the other side where I help people prevent, to help prevent people from getting hacked.
Right. So there's three different types of hackers. There's white hackers, black hackers, and gray hackers. I forget which one's which. I know the black hackers are the ones who hack and like exploit people. She doesn't want to be one of those. She's more like security from hackers
Yeah.
is good information to have practically to protect yourself. And so that's something he alludes to in his book. And I was like, dude, that is actually really, I didn't even think about that. But yeah, security and protection and being able to, he's a spy, so he wants to survive. Like, it just makes sense.
Right, exactly. And if you need to drop off the grid,
Yeah.
then
Don't find me.
yeah, exactly.
Oh, man. Today we also went on a book haul. And so in the spirit of getting more practical information, we got like a couple books here. One is algorithms. So this is going to go in tandem with, and what is this? What were we thinking? Kind of just going over the formulas. This is by the MIT Press Essential Knowledge series. It's the smart people and their books on how they like codify and make algorithms. We're having that as a kind of a source to go with this coding with AI. So if you've got the algorithm and you've got potential coding, you can use AI to fill the gap in your lack of knowledge. And that's kind of what we're going to do, coding with AI for dummies. Yes, we're the goofs. So this is, to me, this is going to be really a great read. Of course, a lot of times with your with dummy series, you're going to have like tests and practical applications for sure. But this really is going to be used in tandem with web design. Being able to code and do web design is going to be pretty powerful. We want all these practical skills because they are like computer skills. And that's kind of everyone knows AI is not going anywhere. And so you want to be ahead of the time. So that's what I'm talking about, like our knowledge base from like the richest man in Babylon says you always need to be on the forefront of technology, at least know something about it, being able to operate in that space. And so just reading about it and seeing if we can apply ourselves in that area, that's what we want to do. So yeah, that's our book haul. And
Good stuff.
yeah, like we're super excited. So we're gonna dive right into the markets, and Q is gonna actually be on point for it. So woo woo.
Woo woo.
Yeah, so out the gate, what do we got, Q?
We got Boeing.
Yeah, barn. Now again, we've gone through, like, full disclosure, we already did this video like once. So because of that, we kind of know succinctly what we're going to talk about. So if you already see it kind of marked up.
The first time I was asking a lot of questions and stuff. So I'll try to remember those questions that I had as we go through.
She had some good questions, but we have Boeing here. What are you seeing, Q?
It isn't a strong downtrend.
Strong downtrend. So the first question first thing we broke down was, how do you identify that it's in a strong downtrend? Show what you know.
For me, I would know if it's in a strong downtrend if it's below this little channel line here, or if it's in a strong uptrend if it's above this like blue line up here.
Yeah, so if it breaks below the Scion line, do you know what the Scion line represents for people who don't know? What is it called? The average true range, right? Mm-hmm. Very good. So if it's below that average true range, right, then and the 21 period moving average is moving in that direction, easy way to classify that as a strong trend, right?
Okay.
I would say. So what would be your trigger to get into this trade, and what would be your trigger to get out?
To get in, I would say
and you can zoom in if you'd like so they can see.
Zoom in.
Yeah.
Like that?
Good stuff, yeah.
Okay. Um, I'll say probably the this right here,
Okay, so break up the rotation. Okay.
like you said retest, follow through.
Right, break and then retest and then follow through. Can I show you an example of that real quick?
Yeah.
Yeah, yeah. So, actually, I have a mouse right here. So this is kind of a break, retest, and then follow through. That's what I mean. So, as it treads sideways, you see market orders build kind of towards the base. You can see that and almost want to take that breakdown because you have 3 weeks of market orders building right here. It's pretty bearish signal. It breaks though, so if you want to catch the second wind or a second chance, it actually comes up, does this retest. At this point, you could potentially take the short break of open, or excuse me, break of close here, and then 3 weeks of follow through there. That's kind of what I mean. So it does actually come up and retest here. So if it continues to move below here, yeah, you could take that for maybe one rotation. But that's about the most that I would want to take from that.
Okay.
So what else you got?
Um, we said, was it O?
Yeah, we like Mr. O.
Okay.
And we were talking about so we are, full disclosure, averaging into O. We're leveraging into O. We like that the dividend for O has been steadily increasing, and that we were talking about when things are cheap, people kind of overlook them, but when things are expensive, people are like all in. They're like, hey, like look at this. This one's been running. If I was back in at this time, well, for some parts of the market, that is the case. And O is like one of those parts of the market. So tell me what you think about Mr. O.
I was also gonna say, with, sorry, with people saying, "Oh, you'll ask someone when are you supposed to buy," and you say when prices are low, but when prices are low, you don't see people buying. So
Yeah.
it's like, do you really know what you're supposed to be doing? Like,
Yeah, that's a good question. So many people understand the practical application of buy low, sell high. If you've got a good company that's got bad news or is in trouble a little bit, but it's still a good company fundamentally, some people don't see that as a buy, where they're looking at like this. I think we pulled up Bitcoin and gold, silver, and the Qs. They're at highs right now.
selling it.
Yep, very good. Nice. So now, like, people are talking about like Bitcoin, gold, silver, Qs. Those are all in the news right now as like the hot buttons, Nvidia, right? But the time to be looking at stuff like that is like at our first arrow. Not that one. First horizontal arrow. Yeah, right there. Very good.
This arrow.
So like we started looking at the Bitcoin ETF kind of at that level because it had already made one push.
Sorry.
No worries. It already made one push, and because of that, we were looking. This is kind of ideally where you like. This is like the perfect spot to look at a buy right there, right? It kind of pushed into that 8 period moving average, broke above it, above previous week's high, and then we took the buy. Now we also took another buy because we're leveraging it at that point. It is in an uptrend, so it didn't have to be perfect. I just wanted to get more into it and then keep following up a little bit up to the next arrow. Next arrow, right there. So the next arrow, that arrow right there, we also took another buy because of the rotational level. It broke the rotational level, the white line for the weekly, and we felt confident that that would be the new floor. Keep going. And it just kind of kept going from there. So the rest is history. So the thing is looking at it from that perspective, would people feel comfortable buying where we bought, right?
Buying down here.
Yeah, would people want to take that risk? Where there's risk, there's reward, and a lot of times individuals have a hard time seeing that as a rewarding position. They're like, hey, I want to see it really go before I get in.
Do you
But
remember the cash flow game where it will give you like the different stocks and it'll be like the lowest $7, the highest like $60, and you'll have to say like whether you want to get in or not to that
yeah,
stock, and then like things will happen and the market will like go up and it'll be like, oh, your price went from $7 to like $50. So if you have shares in it, then your price rises if you're in the market.
right.
So
The biggest takeaways and what Q is talking about, Robert Kiyosaki made a game called the Cash Flow Quadrant. Highly recommend that you get it because you can train your mind to look at your daily walk like financially differently. What she's referencing is one of the cards that you pull is for stocks. And the biggest takeaways for me was, right, you've got a trading, it gives you a trading range and it says, hey, like she was saying, the low might be $1 to $7 and the high might be, $30 to $60. So that range for low to high, you can tell really quickly. Now, how it gets to that typically is associated with the news. And so you're taught to associate bad news with good news for you. Why? Because it's a good potential buy. If it's a strong manufacturer of something that gets into hot water, that might be a good opportunity for you to buy. But if things are at highs, then record earnings, stock splits, stuff like that, that becomes, hey, I'm not sure if I want to buy, like get in for a large position. Just something to think about. Not to spoil the game, but I recommend you get the game.
it's a good game.
It's a great game. It's kind of hard to source now, but I think you could find it for like $80. It's worth every penny though,
Yeah.
especially get the right group together. So
Moving on to the next one was PSA.
yes.
Okay.
So what is PSA?
Public storage.
Public storage.
REITs.
Now, when we were going over it, we identified the trend. It is in a weak downtrend, right? But from last pivot high to last pivot low, right? Major pivot high to major pivot low. I will kind of highlight that for the people. I'll
Okay.
classify this as major pivot high here. Okay, so major pivot high there, and then major pivot low would be kind of down here. So within the structure, make that a story. So within the structure between last major pivot high, major pivot low, and then minor pivot low and minor pivot high, this would be it. It looks like it really rallied through here, but then it has since hit this somewhat resistance level and started continuing on with this downtrend. But the one thing I wanted to note and that we noticed was, how does their earnings look? Their earnings looks about the same, right? When you see the little red and blue.
Earnings $3.78, $3, $3.
Oh no, you're looking at the dividends. So this is
Oh,
$4.29,
$4.29.
and his earnings is
$4.58.
$4.58. Yeah, $3.94.
$3.94. $3.38.
Right. So the earnings reports are relatively in that fluctuating zone, but the dividends. Let's see what the dividend is doing. What is it saying?
$2.
Two to
$2.
All the
$2.
way to
$3.
very good.
$3.
All the way to
$3.22.
so the dividend, which you would be getting paid for owning, for the pleasure of owning the shares, is increasing. You want to kind of see that, and that's one of the things that I noticed. Like with some of these good dividend stocks, getting them while they're cheap might be your best play. Instead of looking at something like the Qs or XLF, XLK, Bitcoin, gold, those things have already kind of moved. There might be more upside, but you can get in at some really good stuff for the low, for real low. So yeah, just keep that in mind there.
Cool. Are we looking at XLRE?
Yeah.
Okay.
So what can you tell us about that?
So XLRE is in a week. It's sideways.
Very
No.
good.
Yeah. sideways, but it looks like it's this. The center line is going down,
Okay.
but it is going sideways.
Very good. So, how I would like line that out, right? Let's say, for example, I'm gonna help you out here with a key level here for the weekly. Here we go. Boom. So if you notice between rotational high, last major rotational high, and last rotational low, right? These guys, and then as it comes and tests this level right here, it's reacting off of that. So I would be really aware if it breaks below the low or breaks above the high. That could be a major break, and we could see some good follow through. Actually, this guy can come down. This guy. Boom. So there you go. There is your kind of juicy rotation, rotating through here, broke below, comes back into rotation, is continuing. So right now it's at fair value. The market likes this price. It's going to continue probably doing this price. This is the kind of stock that's good for good option strategies. But again, real estate right now, what's going on with real estate? How are the prices in the actual market, not here?
They're really high.
They are. So if the prices are really high, right, and it's kind of staying at fair value, then I believe that if prices come down, there could be some really good deals for these companies that are in the real estate sector to snatch up some good properties. So that's why it'd be probably a good time to get into a lot of these, like now, right? Not necessarily buying a property, but buying the people or the entities that you believe will last through a down cycle and be able to snatch up properties. So XLRE is the real estate ETF. XLRE. There you go. We also looked at Schwab. So after everything we learned, what can you tell us about Schwab? And you do the whole thing. You got it.
It's in a strong uptrend.
Nice.
Yep.
Okay.
It went past this level.
Okay, what is that level?
The high.
Okay.
And then it went past it, and then it came down.
Okay.
To retest it.
Okay.
And now it's above it again.
Okay. So what are you looking to do as a result? Maybe do a what?
Probably buy.
Take a buy. Okay, so if you take a buy, what would be your stop loss?
The low of this.
You want to take the low of that or the low of the week?
Of the week. This is the week, right?
That is the week.
So down here.
Okay. So go ahead and put a alert there.
Below?
Yep. Very good. Very good. All right. And it's in tandem with this level here. So if it breaks your rotation down here, right? This support, it has the potential to keep running to the low. That's kind of what we want to avoid. And so if it breaks that level, that's why I say give it some wiggle room. But at minimum, you should be able to get up to rotational high before you would be looking to take a little bit off, making it worth your while, risk to reward wise, at least a 1-to-1 before you take some off or you roll it, whatever. So,
okay, cool. Schwab. These weren't no good, right?
Yeah, we either were too volatile or not really a lot of meat on the bone.
Okay. And that was it.
Yeah, I think we did in the slot. Did we open up in the slot?
I think we did.
Did we do?
We did those, but they were just like.
They were goofballs.
Yeah, because remember it was like that. This one's a strong uptrend.
So strong uptrend, but in a short-term strong uptrend, but I would say it's still in a rotational level, right? So you would have to watch for a pullback there, yeah.
Yeah. 'Cause We have this one.
Yeah, it's a no bueno.
Eh.
No bueno. So,
And then we went to this one.
yeah, and we looked at the big boys. We looked at Lily.
Lily. This is when people are like, man, I should have been in this right now.
Right.
And it's like, no, don't get into that.
Don't be trying to buy shares of Lily right now, right? You
should have been in back here somewhere.
Yeah, you should be right in the news. So the Lily kind of got on our radar over here, right? Because when it started going parabolic, Lily was one of the biggest trades for us that we really realized the potential of options in the right environment with the right training, what it would look like. And I would like to zoom in a little bit, and we'll do this. So our first Lily option buy was here at this zone, and we were like, it was already going sideways. We had taken an option buy, and it took literally 3 weeks. So the last week of that play, it just blew through the roof, right? We got so lucky. And the options were up like a lot, guys. I'm talking about a lot. Like we were like, whoa, dude.
Yeah.
Wild. Price wise, like where we bought it from, 454, 14 roughly. And then before we rolled the contract, it was at 513. Right. After we were like, whoa, this is powerful stuff.
Whoa.
Yeah, it is wild, right?
But then that's when we learned the power of rolling, because the mentor that you had was saying, hey, if it's still going up, don't let it go.
Don't
just
close it. Stay in the uptrend for as long as possible. Like to roll it. And we were like,
what?
What is it? Roll? Are we dancing? What are we doing? Are we rolling it? Huh? Are we? I mean, what are we doing? You know what I'm saying? Roll when you roll it. You know, so it's just one of those things that shout out to the mentor. But it's one of those things that it was a huge play. Our first really, really big play, where this one was on our radar. And we were like, this play for me and Q made us a believer, especially in our mentor. We would say, like, how did the program was set up? We paid the money for the mentor, and his stipulation was what, like, you had to get it back, like how long? Like how long was it?
Like 4 months, I think.
Yeah,
you get 4 months, and you, like, they say that you make your money back within that time, and we're like, okay. And if you don't make your money back, then they continue mentoring you.
Yeah, we really like that system until
you make your money back.
Till you make your money back, right? So they were gonna give you, like, I think 4 months. You make your money back, and you know that's the conclusion. Or if you don't make your money back in 4 months, they'll continue to work with you until you do. But you get to have like almost daily or even weekly calls with your mentor. So the first time when we got that big play, he was like, okay, so you guys rolled it, right? And we're like, what's that? You know. The one that we did roll, we're gonna go to Tesla here, is we rolled it 5 times. We got a little zealous on that. But this major trend break, this was a buy. And this is what we're talking about. The unbalanced volume was green. The trend was going to change. The trend had changed. So this candle, we took the buy break of high, and it could have like just as easily failed, but it didn't. And then it was absolutely like catapulted from there. And so it was up. We rolled it, and then we closed it. Like every other day, I was like, roll it, bro. Yeah,
right.
I like this. You just keep taking money off the table. It was actually really fun. So we caught that move, and we were like, yo, this is some powerful stuff. Like this is why cats in Wall Street be like, they go nuts, dude. It's pretty cool stuff. So Tesla, Lily,
it's a really big play.
Really big play, and for us, we're in it now. I don't think this play is gonna be that big. But just seeing that again just gives me like so much juice, dude. So amazing.
I don't think we looked at anything else.
Yeah, we looked at
the cues.
We looked at the cues. Yes, we did. Looked at the cues. Q. And so we're doing way better with the mic too, by the way.
Woo! We didn't hit the
I need to
mic.
bump the new mic. So with the cues, something we want to kind of hone in on. We talked about relative strength. If you looked at what do we think is going to happen as the market continues, as you can see here, like it did take a very violent drop, but a V-shaped recovery, which is wild. And we had a XSP trade on this for the SPY. I'm gonna bring up XSP. This will be something we haven't covered with them, or unless you watch one of the previous videos. So we actually had a butterfly option here. I think the center strike was 532, and the low strike was 526. So I pretty much written it off at this point. And I was like, yeah, I'm gonna just leave it on because I could have sold it, and I'm like, okay, I'll just save some money. But it ended up working. Like I left it on. I'm like, dude, I might not ever take one of these off ever again. Like, I might like just leave it on all day. And if it works, awesome. If it doesn't, awesome. But that ended up like kicking back like 300% return.
He showed me, and I was like, what?
Yeah.
It's like the last 20 minutes of the market being open. It was just like, all right, guys, buy it up.
Buy it up. Like, go. Right? It was wild. So 20 minutes after it had just done all that, like it just took a giant dump.
Yeah.
And then it basically just ran up through and gave us the result we wanted. And that's the power of like asymmetrics too. So that was really nice. It wasn't like we weren't like hugely leveraged in it, but I realized the power of, let's say for example, you had a trade of like $600 on, you're getting 3-to-1 there. If your account is that big. So it's just something to think about. Like, man, like you would have been walking away with something crazy, right?
Yep.
Yeah, like 1800, or way more than that, 18 racks, right? 18,000
Yep.
for a $600 trade in options. So I was just thinking about like, man, that is so real. And it's a play that I believe that is underutilized because most of the market is just buying calls and puts, constantly buying calls and puts. So
Right.
knowing that those strategies is good. And
I agree.
yeah, we just learned that from the new mentor.
And it takes less money to buy these things. So it's way affordable for the average Joe rather than trying to pay $500 for XSP or $700 for Lily.
Yeah, like getting that contract, like at the money contract for that day. Let's say, for example, you take a XSP contract for that day, just for that day. We're gonna go look at it because full disclosure. Trade grid, thank you. So like, just one contract for the XSP, right, is 2,000.
Ew.
I know. It's a great. I like it.
Oh my God.
Yeah. So for a small account, that might be, 50% of your account. But if you're using micros like the XSP, you can still capitalize on the move, right? You can still catch the move, and it's greatly reduced. So instead of 2,000, it's like 400. But if you're getting out of the money, like option, then you're looking at something more like, 143, stuff like that. So it's just something to think about, like especially if you set your butterfly up, it's like way cheaper, dude. And there's certain ways to do it. I wouldn't just say you go out there and you just do it willy-nilly. We've had training for that, and I would recommend that you get properly educated. You can, there's plenty of online resources, but I would say you need to follow people that have done it before, and they've done it for a profession. So
Right.
yeah.
I think that's all we got for you guys today.
Yeah, guys. We love coming at you guys with the charts. So this is your boy, MC Far.
And Ice Cube.
Appreciate your time. You have a good day and goodbye.
Shalom. Bye.
Bye.